Hi everyone, it's Angus here. I just thought I would have a quick look around to see if there's some alternative asset types like ETFs that might be worth a look at to trade. With all the market volatility at the moment, it's very difficult to perhaps pick individual companies that might be doing well, given all the tariffs and announcements and executive orders that are coming out, and the market's sort of getting belted all over the place. And so the advantage of something like an ETF is one of these sort of, I think of them as bundles, where you're basically betting on a industry or a sector or a commodity like gold or silver or coal. In the case of the US, you might be able to, and I use the word bet because nothing's certain, and it's definitely not trading advice. And I certainly wouldn't put too much money on things at the moment, but there's always something that's moving. So I thought what we'll do is we'll have a look at some of the ETFs. And so these are two sites that I like. There's etfdb.com and there's also ETF.com. You don't have to use both. You can pick one or the other. If you go to this one, etfdb.com, you can click on Tools, and you've got this ETF screener. You've also got ETF screener here, and so I can click on that. I can go to etf.com, and I can click on Tools, and I can click on ETF screener here. And they both are very similar. They both have a lot of the same ETFs. I'm not sure if they have any different, but they're both very similar. This one here you can see has 4,274, and I think this other one's only got about 3,000. So I shouldn't say only 3,000, but 3,763. So they've both got a ton of ETFs. Now, because the market's getting beaten up at the moment, I fully expect that the top performing ETFs are going to be negative ones, where it's basically betting against the success of an industry. And the ones that will probably be performing the best are the leveraged ones. So you might see 2 times leveraged or 3 times leveraged. And what that means is, pretend it means that if the industry is going up by 2%, then if it's 3 times leveraged, it means that you'll get a 6% return instead of a 2% return. And leveraged, any sort of a leveraged asset is a little bit tricky to understand. So they do what they call decay over time. They're meant to be only held for short periods of time. They reset every day. If they they've got the ability to just the way the maths works and the way the ETF works is that it's the longer you hold them, the more likely you are to potentially lose money, or certainly not gain at the same rate as if you held them day by day. So the market sort of wiggles up and down, and so these ETFs will gradually erode over time. So they are meant to be a short-term, buy. Best thing you do is go and put into ChatGPT and say, what are the risks of leveraged ETFs, and make up your own mind as to whether there's something you want to invest in or not. Anyway, getting on with it. So let's click on returns, and I'm expecting to see things are going to get hammered. There's going to be a lot of negative ETFs. So I go and I sort by 1 month. I don't like to look at 1 week because I think that 1 week is too short a period. Like 1 week doesn't really represent a trend, whereas a month is much more likely to be some sort of a trend. So you can see that the top two here are inversed leveraged ETF. Well, these are ETNs. Pretend they're an ETF. They're actually slightly different things. An ETF, you've got less risk. An ETN is effectively an IOU, whereas an ETF you kind of own the shares within that fund. So I tend to avoid ETNs. Doesn't really matter much, but theoretically there's more risk. I don't like the idea of an IOU versus actually owning a product. So you can understand that with global uncertainty, people are less likely to want to fly or want to travel. And so over 1 month, this thing has gone up by 73%. And if you want to find out more about it, I just right-click, open it in a new tab, and you'll go up to here. And quite often there'll be a little description up here that tells you, what this thing is about. If there isn't, you just click on the homepage link. So we'll open this in a new tab. And what you'll find is there'll be 20 or 30, travel stocks that this thing is effectively, betting for or against. So you can see here it says Travelline of exchange traded notes, provide 3 times leverage exposure and negative 3 times inverse leverage exposure to performance of the, Microsector's US Travel Index. So if you think that travel is going to go up, you might buy FLY, U, and I'm guessing the U stands for up. And if you think it's going to go down, you might buy FLY D for it going down. And so, what's it made up of? Well, it's amusement parks, centres, themes, budget hotels, casinos, luxury hotels, river cruises. I'm sure there's airlines in there somewhere. Yeah, multi-region air passenger, multi-passenger ocean-going cruise lines. So if people are economically uncertain about their jobs, uncertain about the future, they're trying to save a bit of money, I can certainly imagine that travel industries will get whacked the first. And so you can see here, this is what this, this ETN is made up of. It's basically saying, they hold 14% of, 14% of the fund is in Uber Technologies, Booking.com, Walt Disney's theme parks, etc., etc. Airbnb, cruise liners, United Airlines, American Airlines, Delta Airlines, Royal Caribbean, and then you get down to the little dribs and drabs down here. So if you think that people are less likely to spend money on travel, then possibly FLY D might be a good place to put some of your money at the moment. Again, I always say that everything's a bit of a punt. It's not trading advice. Make up your own mind. But if I think common sense wise, with the current market, are people going to be splashing out on travel? Probably not. What the difference between these two is, I don't know. They might hold slightly different stocks. They might be from different funds. Don't know, but pick one or the other. Yang, and so this one I'm going to bet. Well, I'm not going to bet, but I'm going to say that I'm sure this is a three times negative bet on the Chinese market. That'll probably be the top 50 Chinese stocks from memory. And so again, if I open up this one and have a look, and so with all the ETF, with all the tariffs and trade embargoes against the US, from the US against China, what do you think is going to happen to the top 50 Chinese stocks? I don't know, but I'm guessing that if they lose access to the American market, the whole Chinese industrial sector will probably suffer. So this ETF offers 3 times daily short leverage to the FTSE China 50 index, making it a powerful tool for investors with a bearish short-term outlook for China large cap stocks. So investors should note that leverage resets on a daily basis, results of compounding of returns when held for multiple periods. Yang can be a powerful tool for sophisticated investors, but should be avoided by those with low risk tolerance or buy and hold strategy. So let's have a look at what the homepage says. Sometimes they list them down here. If you go to holdings, it might have it here. Sometimes they do, sometimes they don't. It's all a bit fluffy as to what they do. Or not, I shouldn't say fluffy, a bit inconsistent. So yin and yang. So I'm guessing yin is positive, yang is negative. So that's quite clever use of terms. Yes, you can see yin is, if you think China's going to go up, it's 3 times leveraged for up. And if you think it's going to go down, it's 3 times leverage for down. And so, I don't know, it's probably just top 50. So here we go. So if you think Tencent's in trouble, Alibaba's in trouble, imagine being Alibaba and Tencent, where a lot of your sales are going to the US, and all of a sudden there's now 104% tariffs. So you can imagine that some of these might start to suffer a bit. So again, you can kind of understand why this one's doing so well at the moment. Then you've got things like, VIX. This is short for Ethereum, if you think Ethereum's like to go down. Semiconductors, like I certainly can understand that. So with most of the semiconductors, I think they said something like 80-90% of semiconductors come out of Taiwan or, that part of the world. And so if there's, significant trade tariffs against that, and, Trump's very much trying to get them to, build semiconductors inside the US, and, there's all sorts of trade embargoes about, whether you can sell, certain NVIDIA chips to China, and, especially around the AI ones, then I can imagine that, this semiconductor area could take a bit of a beating as well. So I won't go through all of them, but, I'm just saying logically, if you think about it from a common sense point of view, I can understand travel is probably going to take a bit of a hit over the next, 3 to 6 months. I can understand that, the top Chinese stocks will probably take a hit over the next 3 to 6 months. I can understand logically that something like semiconductors might take a bit of a hit over the next 3 to 6 months. And so you can just go through it. This is biotech. There's internet stocks. There's all sorts of stuff, and they'll all be very, very skewed towards negativity. I think that you'd find there'd be very, very few positive ETFs. So if I wanted to look for that, and in my case, I love the idea that energy might be going up, but I just suspect at the moment it probably won't. So if I go, let's see if I tick commodity. There we go. So if I wanted to, look at investing in agriculture, because Trump's saying that they're going to, do a lot more for farmers, energy, industrial metals, they're going to produce a lot more of their own, metals locally, livestock, precious metals, gold I can imagine is doing quite well. But let's say I'm interested in energy, because he's come out with a lot of announcements around coal. So let me click on energy. Don't know if coal's in here, but let's have a look at energy. So I'm now filtering by energy, and so you can see these are still short energy. They're short. So energy certainly hasn't made any sort of a comeback at this stage. Energy 3 times inverse leveraged ETNs. Microsector oil and gas is 3 times inverse. So the things that are still going up are the people betting against those industries, which I think is quite interesting. I could go and see somewhere down here. See, it's got leveraged, and so I could say inverse, any, yes or no. I'm going to say no. So I want to get rid of all those inverse ones. I only want to look for ones where they're for the industry. They're all negative. Nothing down here is positive. 1 month. Gasoline's maybe the closest to turning positive, but they're all just negative. There's nothing. Even though Trump's all about drill, baby, drill, none of these ones that are positive have, got any sort of upward traction. Microsector Energy's 3 times leveraged ETNs. It's down 46% over the last week. So it just means that the energy sector is not benefiting from Trump's very pro drill baby drill policies. Not at this stage anyway. But so that's a bit of an overview of ETFs, and where you might start to look for opportunities. Super simple. Click on returns, sort by whatever time period you want, but I'd suggest a month, and then just start going through them and see if there's anything logically that attracts your eye that you might want to explore further. This other site that I showed you, ETFs.com, exactly the same. Just go to performance. I think they only do 1 month, they don't do the 1 week. So again, you can click on that and say, show me the ones that are doing well over 1 month. And so you can see here, so daily semiconductor bear is running at 78%. Direction daily, is running at 3 times, 72%. And that's SOX and that's Yang. I think you'll find they're the same here. Yang, and then SOX. So you can see that those two are the top 2 on the other site, whereas they've got the travel ones here doing better, and then see the travel ones here. So they're all going to be the same sort of asset classes, I guess. And anyway, I hope that might be a little bit of interest. If you're looking to put your money somewhere, or just learn a bit more about the markets and where you might be able to invest, this might be a good way of doing it. So, or just an alternative. And if you haven't seen this before, it's kind of cool. Like where instead of having to try and pick the individual stock that's going well, you can sort of say, well, I'm just prepared to invest in this overall category, and hope that I do better by investing a little bit more broadly, so that if one of them, one of the individual assets goes up or down, it doesn't really affect your overall performance, because you're in a sort of a bigger bundle of stocks. Anyway, hope that was of interest, and as always, comment below if you learnt anything or if I've made a mistake. And I think it's all pretty straightforward, but it should be fairly clear to most people how to invest in most of these. You just look it up in your broker, and you'll be able to find SOXS and Yang and FLYD, and you should be able to trade them the same way that you trade a stock, for example. You can still put stop losses on them. You can buy and sell them, trade them, whatever you want to do. They're interesting way to trade the market. Thank you for listening.